On Wall Street yesterday, something happened that made people on trade floors, in hedge funds, and in cryptocurrency offices all over the world very scared. The price of XRP trading at $60,000 was quickly shown on every Bloomberg screen. Bloomberg is a very important tool for institutional investors. First, let's take a look at the bug itself. A quick and unexpected event that shocked the financial world and made even the most experienced traders wonder what they were seeing. This kind of trouble isn't just a scientific one, especially in a place where speed and accuracy are very important. It's a moment that could change how workers trust the tools they use every day. Traders who did not want to be named filmed a strange scene involving several Bloomberg computers, which are used by professionals all over the world. Soon, it came out that the price of a XRP coin was an absurd $60,000, which is a lot more than its present market value. Investors double-checked their screens, not sure if they were seeing a once-in-a-lifetime chance or a disaster waiting to happen. Mistake. It was clear that everyone in the room was shocked. Right next to the normal market data for Bitcoin, Ethereum, and other big cryptocurrencies, there was a strange surge. At that point, the strange event was even more amazing for the people who were there at the time. The prices of other assets stayed mostly the same, but the price of XRP went through the roof. Because of this, things got a lot more complicated, which also sped up things in the trading rooms. It was up to the customers to figure out what the numbers meant. As some screens went black for 10 seconds at a time, people were typing quickly and whispering their guesses. These were the only sounds that broke the quiet that had been there. After that, the system was restarted, and prices went back to being much lower where they should have been. This happened right away after it looked like it would. Everyone breathed a sigh of relief, but there was still a buzz of worry in the air. In spite of this, the damage was already done before the jump. Traders acted right away when they saw what they were seeing. They called their desks, dealers, and risk teams non-stop to confirm what they were seeing and figure out what could happen. People started talking about this event almost right away because it showed how powerful and possibly harmful today's financial technology can be. This was a strong warning because it showed that even the most advanced systems can fail, and that you should always be careful in the fast-paced and very competitive world of business. When traders see the screens in person, they call it the time travel glitch, which is a funny way of saying that Bloomberg's network can see information about future prices. Even though this sounds like something from science fiction, it's hard to ignore the historical link that has been made over and over again. Because of this, how could Bloomberg, the world's most important source of business news, let something like this happen? This is the official statement from the company, which says the problem was technical and affected certain processes. The failure had no effect on trade, and it was fixed within minutes, according to statements made to the press. Some people who follow the market and work in the industry think that complex, predictive algorithms like those used by big banks and trading firms may have correctly predicted how the price of XRP would move in the future, either by accident or on purpose. These very complex computers look at a huge amount of information, such as order flow, liquidity gaps, and trade patterns from the past, to guess when the market will go up or down. With these algorithms, patterns and links in millions of data points can be found in real time that people can't see. Since this is the case, they are at a disadvantage when trying to guess how the market will change. On the off chance that these computers notice strange behavior or big changes in liquidity and OEM, they might automatically make trades or show price predictions that don't make sense. Because of this, some people are wondering if what seemed to be a technical issue was actually a hidden sign, showing what could happen if big banks and payment systems start to use XRP on a big scale. Some people think that these bugs could be early warning signs or even sneak peeks of a future where XRP is an important part of global banking, thanks to the use of cutting-edge technology and large amounts of money from institutions. To be clear, the so-called fault might not have been a mistake at all, but rather a leak of old information. A sneak peek at XRP's impending launch. Once institutional liquidity and settlement methods are fully in sync, XRP could completely change how digital assets are traded. If these claims are true, we might be seeing the start of a big change in which digital assets like XRP become the building blocks of the next era of financial markets and change how money is sent around the world. If you remember what happened during the cryptocurrency cycle of 2017, you will be able to spot the trend. Early accumulation by institutions was followed by huge jumps that changed the market. Possible explanations for the strange event that happened on Bloomberg is the first sign that XRP is hitting the same time period. At the same time, it is said that governing bodies are looking into what happened. The Securities and Exchange Commission, SE, the Commodity Futures Trading Commission, CFTC, and their foreign peers are talking about the strange event behind closed doors. They are trying to figure out if it was a data breach, market manipulation, or an early sign of what institutions are getting ready for. Some experts in crypto say that this is not the only time that something similar has happened. Some people have said that private banking dashboards, alternative financial tools, this information has been shown on screens in hedge funds and other places. Because of this, it looks like the $60,000 signal may have been sent across data collection networks, either on purpose or by mistake, since the systems are so closely linked. Now that we've reached this point, let's take a step back and look at how past has affected the financial markets of today. It is important to know about the past in order to understand the present and make correct predictions about the future. Throughout history, there have been times when unstable situations, the arrival of new ideas, and quick changes in how people feel about digital assets are all things that can happen. The dot-com boom and the rise of global stock markets are two examples of times when things went very well and very badly in the past. These cycles have been around for a while. There are risks and chances every time technology changes, making changes to the rules that are already known and letting new people join the game. All the big market oddities that happened before the big gains, like Bitcoin's huge rise in 2017, which even experienced investors by surprise. The sudden rises in other digital assets have also caught investors off guard and changed how we see and deal with these markets.